Good morning and welcome to the 80th Securities Markets Update. The US dollar kept on declining during the first trading day of the week on more negative economic releases, including the Empire State Manufacturing Index and the Industrial Production, while the NAHB Housing Market Index showed a notable recovery. But first of all, the Empire State Manufacturing Index unexpectedly declined back toward a -2 in June, down from a 3.09 in May, while the estimates were to rise by around the double toward 6. And this is also the biggest monthly decline since January of 2013, and also the decline in this index also was driven by or mostly by a sharp decline in the new orders, which declined by the most since April, and the 6-month future estimates, which also declined to the lowest level since July of last year. The industrial productions data also came in with a surprise, or declining for the second month in a row, declining by 0.17% in May compared to a decline of 0.5%, which has been revised also from -0.3%. The interesting thing is the year-over-year industrial production which also eased back further to the lowest level since January of 2010, declining to 1.37, down from 2.03 during the same period, and this is the sixth slowing down, or monthly slowing down in a row. The capacity utilization rate also slowed down further again, declining toward the lowest level since January of last year towards 78.01, down from 78.3, while it having anticipated again to remain stable with no change. And this is the sixth monthly also slowing down in a row, which is not seen since 2009. The good news only came in from the NAHB Housing Market Index, which also rose to the highest level again since September of last year, jumping toward 59 in June, up from 54 in May. As for today, there are a collection of economic releases during the European session ahead, which is likely to have a major impact on the market. Beginning in the UK, all eyes will be on the inflation data today, and starting with the CPI, or the year-over-year CPI, is expected to rise again towards 0.1% in May, up from a decline of 0.1% in April, which would be also the first positive reading since January of this year. The year-over-year core CPI is also expected to advance again to 1%, up from 0.8% during the same period, which would be also the highest reading since March after 3 months of consecutive declines. We'll be waiting also for the PPI figures in the UK, in addition to the retail price index and finally the housing market index in the UK, but the main concentration will be on the inflation data. In Germany, the ZEW economic sentiment index is expected to decline again, it will be released today, and the estimates are to decline again back toward 37.5 in May, down from 41.9 in April, which would be also the lowest reading since almost December of last year, and the third monthly decline in a row. However, a surprise jump also could be seen given the fact that most of the economic releases showed a notable recovery last month. Finally, in the Eurozone also, we'll be waiting for the ZEW economic sentiment index, is also expected to decline again, or slightly, towards 60.3, down from 61.2 during the same period, which would be also the lowest reading since February and the second monthly decline in a row. Going forward to the US session today, there are two economic releases related to the housing market, which may also have a notable impact on the market, especially if they show the surprise readings. The building permits is expected to decline again by 3.5% in May, compared to a rise of 9.8% in April. And finally, the housing starts may decline by 4% after the sharp rise back in last month by 20.2%. Despite all of these figures today, the US dollar may continue to trade within a choppy range of the Federal Reserve decision. However, further disappointing economic releases may grant another short-term decline in the dollar across the board. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.